Okay, I'll make that 11 o'clock. So hello everyone, let's get going. Firstly, thank you for joining us. It's John and Nathan here from Blue Sky. Hope you're all fit and well, and most importantly not suffering from too much Zoom fatigue. That's a phrase I heard for the first time yesterday, and I think it resonated quite a lot with us, to be honest. Today our intention's to talk you through how your business can fund your innovation through R&D tax credits. We expect the discussion to last between 25 and 30 minutes, so that we won't get zoomed out. We'll keep the content reasonably high level without too much tax speak. We might get dragged into it a little bit. It's hard not to with R&D tax credits, to be honest. We're hoping the session will be as interactive as possible, so please use the Q&A facility. Some of you maybe had first-hand experience of R&D tax credit claims before. Some this might be the first experience of R&D, first introduction to it. So just encourage you all to ask questions as we go through, and we'll endeavour to answer them as they appear. Okay, so yeah, this is your Blue Sky team today. It's myself and Nathan. We'll set the scene a little bit now. Blue Sky is a practice, and we've been involved in R&D tax credit claims on behalf of clients coming up to 10 years now. We're currently completing between 10 and 15 investigations and submissions every month. And over the last year, we've managed to save tax or get cash back in the region of £2 million for our clients. So that's something we're pretty proud of. Small practice in the Northeast, and we've developed a real expertise in this area. Certainly over the last 6 to 8 weeks, we've been able to bring forward the R&D claims we've been doing, which has been really helpful for those clients looking for the cash back since the COVID-19 pandemic started. And HMRC, to be fair to them, have kept to their 30-day SLA in most cases as well. So in terms of the agenda, Nathan's going to be taking us through most of the conversation. I'll be asking questions supported by you guys as we go. We'll be touching on three sort of topic areas, loosely around how R&D tax credits work, what's classed as an innovation, and how to save money through R&D. So to get us kicked off, Nathan, I guess the first question is quite a broad one. Tell us about R&D tax credits in a nutshell.
Yeah, so high level, it's basically tax relief for a credit that is designed to reward innovation in the UK. The overarching idea is that, if we've got lots of businesses sort of innovating, it's going to drive the UK economy forward as a whole. HMRC obviously realised that development work in its nature is pretty much going to be a loss-making project for most businesses. There's not really going to be an early return on that. So the idea for the relief for the tax credit is to just give them a bit of a helping hand, and like I say, to sort of incentivize that innovation.
Great. So how do you go about sort of identifying a qualifying project with a client? What's the process you sort of follow?
Well, we'll often see sort of costs going through the P&L as we're working with the monthly management accounts with the client. But in all honesty, there's usually quite a lot of R&D somewhere within a client's business. So I always ask the question as we approach the year end and the pre-year end meeting. And it basically forms a bit of an interview scenario, to be honest, with the client, whereby, we know what criteria we need to hit for R&D, and we'll just really discuss what work the client's been doing throughout the last 12 months or 24 months. And yeah, if there's anything that we think there could be a potential claim in there, we'll dig a bit deeper, and the conversation usually does lead to the fact that, yeah, there's probably a claim involved. But yeah, it does sort of heavily rely on meeting HMRC's quite specific criteria for a qualifying project, which if we move on to the next slide.
Yeah, let's talk about that, because there is there's plenty of guidance, isn't there, from HMRC, but often what you sort of Google and get on the web isn't the reality, is it?
Yeah, like HMRC have a little quite a different view on what will qualify as research and development. So, you know, the main thing that we're looking for is a technological or scientific advancement, which, you know, in itself can probably be quite a subjective area to show that. What you really need to nail on the narrative that we provide to HMRC with the claim, though, is that the advancement and the work you've done to achieve that has overcome some sort of uncertainty. And if there basically isn't this uncertainty involved, then HMRC won't class it as R&D. And this is where, you know, it gets a bit tricky. And I think this is where, you know, a lot of the work we then do is really sort of honing in with the client's work on where that uncertainty might lie. If I was to try and maybe put it into a single sentence, if a competent professional in your field was basically just given enough time and money and you wanted to get from point A to point B, if a competent professional in your field at the start of point A was like, yeah, I definitely know how to get there, just give us some time and money, I'll get to point B, absolutely no problem. There might be an advancement in that project, but there's no uncertainty. So essentially what there has to be is some sort of, you know, brick wall a part way through the project that, you know, when you guys hit it, you know, you're either back to the drawing board, or it might even very well be the case that you've sort of wasted your time and money and you've realized you can't do it, but you never were going to get to that point until you started investing time and resource into the research work that you do. And it's that bit that we need, and it's that bit that we need to show to HMRC to make sure that your claim qualifies.
I remember when I first came across R&D tax credits, and I sort of imagined almost a man or a woman in a white coat in a lab. It's probably before your time, the Tefal adverts, where you had these kind of brains of Britain inventing things, but it's not like that at all, really, is it? It's pretty much open to most businesses and industries within reason.
Yeah, I think that's like a traditional view where, you know, you do picture the sort of inventor sitting in a big factory trying to invent some amazing new machine or something, but there's all sorts of practical real life examples, even sort of boiling down to if you're in quite a traditional industry, for example, but you might have, you know, revolutionized the way it can work, even by like inventing a new process, you know, that can then be rolled out across, you know, other businesses in your industry, or they can then build upon that. You know, it doesn't have to be some absolute scientific breakthrough. And yeah, well, we're obviously seeing a lot now in today's day and age, and with the way technology is advancing, a lot of it's actually to do with software development. So a lot of it's not actually anything tangible that you can touch.
Yeah, it's kind of that moment, isn't it, where you're scratching your head and you're thinking, how do you go about this? It's almost at that point challenging. This potentially could be a piece of R&D work and might qualify for sort of tax credits. Have you got any sort of good examples, some real life examples that maybe you've come across fairly recently that you can share?
Yeah, so I mentioned some software development there. So we do have some like really weird and wonderful stuff with some of our clients at the moment, particularly around artificial intelligence. And yeah, like, you know, it's R&D tax credits is really one of the most interesting areas of probably accounting tax, in my opinion. You can really sort of come to terms with what your clients are actually doing and dig down into the detail.
Doesn't it?
What was that? Sorry?
Doing a VAT return.
Yeah, but everyone's got their own preferences, haven't they? So yeah, you know, like you do get the, you know, the absolute genius stuff where people are working with artificial intelligence, and it, you know, it just absolutely blows your mind to see what people can do now with computers and software. But we do get involved in a lot more practical stuff as well. You know, I think maybe one of the more sort of real world examples, we've had one in the past, and a bit of surprising because you wouldn't assume it'll jump out as R&D work, was actually a company that you know, that had a contract in where someone wanted something sort of printed but with a very specific color, so a very specific shade of a given color. And at that moment in time, there was no actual ink that existed that would print that exact shade of color to stick on the given surface that was required. So, they had to go away and basically develop an ink that would do this. And, that class is R&D. Now, the company at the time thought, well, that's just sort of in line with the processes and the work that we do day in, day out. But it hadn't quite occurred to them that, that there is an R&D claim in that. So it's always worth investigating, and it's why we always ask the question and have a little bit of a chat with our clients every year about it.
Cool. So I guess as you get into the claim, what kind of costs are you looking for? What are the sort of usual ones that kind of jump out every time?
So there is sort of very specific costs listed out by HMRC and what we can include. In most claims, about 80% of your total qualifying cost is going to be made up of your sort of internal staff time and your subcontracted staff time. So, these are the people that are working on the R&D. So, when you've got your direct staff costs in there, it's the gross salary, the employer's national insurance contributions, the employer's pension contributions, and any out-of-pocket expenses that the staff might have incurred themselves and been reimbursed for the project. So as you can imagine, like I'm sure everyone's aware of how high payroll costs can be in a business. So you just basically apportion your staff time. So, it is best practice to have timesheets, etc. And you can basically allocate the staff time to the R&D project, and it does add up. Similarly with subcontractors, you'll often find in some instances the R&D work that you do does need some specialist advice and some specialist involvement. And a lot of the time that comes via a person externally to the business via subcontracted work. There's then a few other bits and bobs that do get added in. In most instances, it's not as much as the staff time on the project. But going back to your thoughts, John, of having the scientists sitting in a lab somewhere with all these spanners and bolts and stuff. So any consumables. So if you are, creating something tangible, then your prototypes and anything like that, and the materials used, that can all go in. Going back to my example, all the wasted ink used on the stuff that didn't stick to the given surface, that can go in there. If you're doing anything around sort of software development or anything like that, then your software costs used on the R&D project can be included. And then clinical trials is in there as well. If anyone who's in attendance does do any sort of R&D around medicine, etc.
And I guess at the moment as well, there's a lot of business owners and staff members working from home and picking up R&D projects that potentially they've had on their to-do list, for months, if not years, and getting stuck into them. So we're encouraging clients to be thinking about kind of that side of things as well at the moment. Okay, cool. So yeah, that seems reasonably sort of straightforward on the face of it, but like most things, I guess the devil's in the detail. So if we can sort of dig a little bit deeper, I guess, and there's a couple of areas you've pulled out that are probably relevant to most clients as well, and we get asked the question about. And the first one you've sort of talked about was subcontractors.
Yeah. So subcontractors are a bit of a weird one when it comes to research and development. There's two ways you can basically be treated as a subcontractor in the eyes of HMRC, at least when it comes to R&D. And that's as a subcontracted worker or an externally provided worker, which I'll just refer to as an EPW going forward. If you're doing an SME claim,
bit of jargon.
Yeah, sorry about that, but it has to come in a bit sometimes. So a subcontractor in the eyes of HMRC. Is, you know, if you get some guys in and say, look, I've got a bit of work for you. I don't really care how you do it. I need it done in 2 weeks. Yeah, you go. Here's some money. I'll see you later. Come back in 2 weeks, and I'm sure it'll be done then. They're a subcontracted worker for the purpose of R&D. An externally provided worker, an EPW, is someone who you're actually bringing in, and for all intents and purposes, they're actually an employee for the duration of that project of the business. So they might not be on payroll. You are still sort of just paying them on a monthly invoice, for example. But, you know, that they're coming on site every day, or, you know, they're on Zoom chats every day at the minute. They're in the daily briefings, you know, that they're contacting people within the business freely, or maybe people outside of the business are contacting them. That would then fall under the EPW umbrella. Now, if we're doing an SME R&D claim, then there's no real difference between a subcontractor and an EPW. That can both basically be treated the same. It does get a bit more interesting if you ever have to do an RDEC R&D claim. Now, RDEC is for a much larger businesses. We will go through the thresholds for this later. I think there is a slide on it. So probably not really much concern for anyone attending this call, but it is worth bringing up because there can be an effect where your business might be a subcontract or an EPW for a larger business's R&D claim.
That's where we mainly see it, isn't it? In that
Yeah.
situation.
And it does get really technical on this point. And it is then like really having to drill down on, you know, what the claim is that the larger company doing that you might be subcontracted for versus the work that you're then providing. Because in most instances, there will be a sub R&D claim on the work that you're doing. And we do appreciate that it might be quite a commercially sensitive subject. So you might very well not really know what the larger company that might have subcontracted you is doing. In this instance, you know, if you think this might apply to you, we always just recommend to get in touch with the accountant and talk it through, because it can get a little bit messy sometimes if you don't consider all areas on that.
One question I was going to ask you was about, in terms of tracking staff costs or time, do you recommend that clients keep a timesheet, or how does that work?
We do recommend it if possible. Yeah, like all instances with HMRC, it's better to have a nice, clear and defined audit trail for anything that you're submitting to them, especially if they're in the position where they're going to be giving you money.
Yeah.
We all know how they feel about that, and they like to dig into things sometimes. We do appreciate that it's not always, you know, necessarily sort of applicable to have timesheets for everyone. So, you know, we can put a reasonable apportionment in for staff time, although we do advise that there is some backup to go alongside it. But, you know, if you have had an R&D project in the past and you haven't got timesheets or anything, it's not all doom and gloom, as long as you've got a good sort of reasonable argument. So, you know, if you had a member of staff that worked on R&D, you know, Monday to Thursday, and then caught up on all their emails and everything on a Friday, then yeah, you know, we've got an argument there that, right, we can apportion about 80% of their time. The only thing I would say is never put through 100% of any staff time on R&D, because HMRC are really picky, and they will ask questions around toilet breaks and coffee and that sort of thing. Yeah,
and often in a small SME size business, it's kind of, you know, you're wearing 15 hats on any given day, so not just your R&D hat as well. I think one of the other areas you were going to touch on, which I guess is applicable at the moment, was around grants and subsidies and how they interact with R&D as well.
Yeah, so I've mentioned it just a little bit before there. There is two claims. So there's the SME claim for the small and medium-sized businesses, and then large companies have the RDEC claim. Now, it was briefly on one of the very first slides, but high level, you know, the SME claim, you get 33 pence back on the pound of every pound R&D spent. RDEC, for the large companies, is more like 9 pence you get back on the pound of R&D spend. So it's a lot less lucrative.
Yeah.
Now, a common pitfall that sometimes we see, especially when people have sort of done this in the past and haven't really thought about their R&D claim, is you can be a small or medium business, but if you get some forms of grants and subsidies, you could end up doing an RDEC claim. This is because the SME R&D claim is also classed as state aid, because it is quite a lucrative claim to make. The issue arises is if you've had any other state aid grant income during the period that you're doing an R&D claim for.
Which is often the case, isn't it? Like a innovative UK grant, or there's loads of small ones around, aren't there? That the SME community sort of chip into. So it is
definitely. There is ways around it. So we always tell our clients, if a grant comes on the table, it'll definitely be worth probably going for most instances. But you need to make sure that the terminology is right and everything's right in the agreement, which we'll touch on in the next couple of slides. Yeah. So I basically tell all my clients to run any grants past me first, because you might be in a position where switching from an SME claim to an RDEC claim, you might lose out on tens of thousands of pounds worth of R&D, but you've only had a couple of £1,000 in as a grant.
Yeah.
And the reason this can sort of happen is the terminology of the state aid grants received. So there is a de minimis threshold, and it's €200,000 over any 3-year rolling period. If you're under this, then your state aid can qualify as de minimis. If it's in this case, we can ring fence the spending on R&D that state aid has been used on, and do an RDEC claim just on that spending, and we can then do an SME claim for the rest of it. What will happen if it's not clearly listed as de minimis state aid, and we can't prove that, and it basically goes in as notified state aid? If you picture it like a tea bag going into a glass of water, it just taints all of your R&D spend, meaning that you have to do RDEC on everything. And when we're going back to 33 pence on the pound versus 9 pence on the pound, you can lose out on quite a lot of R&D for potentially quite a small grant. So what you need to do, and if you just go on to the next slide, John, I think it's where we've got the project split, yeah, is make sure that whoever you're in discussions with on the grant, if it is below that de minimis threshold of €200,000 over any 3-year period, make sure that the terminology is included in the grant agreement and that it does qualify as de minimis.
Yeah.
What you'll then want to do is, instead of having one big overriding R&D project, is actually split those out into your sub projects. So in this instance, highlighted on the screen, you could have highlighted your R&D into 5 core areas, and we might have well had some state aid, and we're basically spending that on project 2 and on project 5. And if that's de minimis, it basically means we're doing an RDEC claim, so 9 pence on the pound for those 2 projects, but it still leaves project 1, 3, and 4, and all the expenditure on those projects to do the SME claims, and we're back to getting the 33 pence to the pound.
It's a pretty complicated area, but it's one to sort of to really keep an eye on, isn't it?
Yeah, like it's a really common pitfall, and sometimes when we work with clients just as a one-off for a one-off R&D project, and we go back and look through their accounts for the year, and yeah, we found out that they've had some grant income, and they haven't been able to prove that it was de minimis.
Yeah.
And then you do then miss out. So it's we always implore our clients to just run any grants past us first.
Okay.
Just to make sure, because even with the RDEC claim, it's still worthwhile getting the grant in most instances.
Yeah.
And yeah, just for the avoidance of doubt for anyone there, that's the thresholds there to be a large company. So 500 employees, €100 million turnover, and 86 million gross assets on your balance sheet. So yeah, I would imagine probably most people in the call will be below them.
Most of the claims we come across are definitely SME, but then they flip into RDEC intermittently due to the interaction with the grants and subsidies. Yeah.
Yeah.
Can you just talk through, I guess, the practicalities of the process around the claim and kind of the work that sort of the clients feed into, and just a little bit about the process?
Yeah, so like I mentioned, we if we're working with a client throughout the year, then we'll pretty much be in discussion around R&D throughout. Like I say, there is some pitfalls that can fall into, so it's imperative that they're always in touch with us about it. But the main bulk of R&D work goes alongside the year-end accounts. The claim goes on your CT 600, which is your corporation tax return, and this is done every year. And goes alongside the accounts that are submitted to Companies House and HMRC. So in the pre-year end call, where we're having a bit of a catch up and making sure we're getting all the relevant info that we need, we'll then have the discussion around R&D, and we'll have that sort of interview scenario to make sure that we hit all the criteria that we discussed earlier. There is a narrative that needs to go alongside your submission, and this is what the reviewer within HMRC will be reading to make sure that it qualifies and it's hit all the criteria. So this is where the value comes in, and when we're writing these up for our clients, it's vital that without as the reviewer's reading through, we're hitting the advancements, we're hitting the uncertainty, because what we don't want is HMRC to come back with questions more often than not that can be answered, but it really does just slow down the claim process. And now more than ever, we need to be getting money into our clients' bank accounts. So it goes alongside the year-end accounts work. All the costs we discussed are pulled in and put in the calculations. And then once that's sent off, HMRC have a 28-day promise, whereby if it's successful, the money will be in your bank account if you're in the reclaimable position. So just sort of going on with how the claim actually works, there's two scenarios basically, and it depends if your company's profit making or loss making. So if we're a profit making company, the claim basically works as a tax reducer. So if you're making profits, you're going to have a big corporation tax bill in most instances to pay at the end of the year. The way it works for profit-making businesses is for every £1 of expenditure, you basically get a £1.30 enhancement, an R&D enhancement. So you basically get 130% of your R&D expenditure. So in this instance on the screen here, it does say trade and loss, but we've got £600,000 of R&D expenditure. The enhancement that we then calculate will come out at £780,000. What you'd do is you'd get in your tax calculations with HMRC. So let's say you ended the year with £1 million profit. You get to then deduct the R&D enhancement off that again. So with £1 million, and in this example, we would then deduct a further £780,000, and you'd only be taxed on the £220,000. So your tax saving there is 19% of your 130% enhancement. Now, I appreciate there's a lot of numbers and percentages there, so I hope that's made sense.
Yeah, it's kind of, you spend £1, it becomes £2.30, doesn't it?
Yeah, so that's when we're in a loss-making position.
Yeah.
So in a loss-making position, you've obviously got no corporation tax to get a reducer on. So this is the instance when HMRC will actually pay you the money back. And in this instance, you do take the full £2.30, so the full 230%. So in the example we've got here on screen, you take your 600,000, you'd add onto that the 780,000. You then take that total, and HMRC will then give you that back as cash, and 14.5% of that figure they'll give you back as cash.
Which is what comes back in within 28 days, isn't it? And
yeah,
because you've went from paying no tax to actually reclaiming cash back on the lost benefit, I guess, of the tax reducer, haven't you? It's a lower percentage, but for an R&D company who's investing heavily, it's a really lucrative tax relief, I think.
Yeah, and it's just worth noting that you do have to be a going concern with HMRC. So if you know you're going to be going out of business in a couple of months, and you think you'll just get an R&D claim in to get a little bit last bit of cash out, yeah, HMRC will pull you up on that, and you can't put a claim in.
Yeah.
Deadlines for doing so is 24 months after the period end. So if you do think going back 2 years, you have done some R&D and you haven't claimed, there is still time, and you just have to submit an amended corporation tax return, and you can go back for 2 years.
Okay. Cool. Well, I think we're nearing our time now. So one last thing to end on, and we get asked about this a lot, was advanced assurance and what that's all about, and whether it's, I guess, worth doing from a first claim perspective.
Yeah, so if you're a little bit unsure, if your project qualifies, and you don't want to sort of invest all the time and effort, to put in a claim for it just to be rejected, you can sort of submit a draft narrative to HMRC saying, look, this is the work I'm doing, will it qualify? They'll either come back with a yes or a no. If it's a yes, then they basically won't ask any more questions for your first 3 years worth of claims. It is a point to note, though, that if you've already submitted a claim in the past, you can't get advanced assurance. So it's purely for people just dipping the toe in the water for the first time with it.
Yeah, great. Okay, thanks very much, Nathan. That was you kept the jargon light, so that was excellent, and thanks for your insights. Thanks to the attendees on the call. We do have a guide on our website that you can download free of charge there, which covers everything we've talked about, and we've also recorded the webinar, so that'll be available, and we'll send that on to you. So thanks everyone. Enjoy the rest of your Wednesday.